Listen to me. If you are retired or about to step into your golden years, you need to hear this, and you need to hear it right now. Many of you are stepping out of the traditional workforce and thinking, I'm going to turn my passion into a little bit of cash. Maybe you love woodworking, maybe you knit, sell vintage collectibles online, do a bit of consulting, or rent out a camera on the weekends. You think, Susie, it's just a hobby. It's just a side hustle to keep me busy and give me a little extra play money. Stop right there. Because what you do not know about how the IRS views that harmless little hobby can cost you thousands upon thousands of dollars in unexpected taxes, penalties, and painful surprises. Here is the fear that so many retirees face, whether they say it out loud or not. You worked 40 years to build your nest egg. You are on a fixed income, or living off your investments, Social Security, and savings. You cannot afford an accidental tax bill that wipes out your emergency fund. But here is where people get trapped. They start making a little money from their hobby, and they ask the wrong question. They ask, do I really have to report this small amount of money? Yes. Every single dollar you earn, whether it is paid in cash, through Venmo, Zelle, or reported on a Form 1099-K, is taxable income. The IRS requires you to report all of it. But here is where the critical trap lies, and this is the core problem. Are you running a business, or are you operating a hobby? Because the IRS treats a business and a hobby completely differently, and if you get this wrong, it will burn you. If the IRS classifies your activity as a hobby, you must report every single dollar of gross revenue on Schedule 1 of your Form 1040. But guess what? Under current tax laws, you cannot deduct a single dime of your expenses. Think about what that means. If you sell $5,000 worth of handmade birdhouses, but you spent $4,200 on wood, tools, and supplies, you do not pay taxes on your $800 profit. You pay taxes on the entire $5,000 gross income. You are being taxed on money you spent just to create the item. That is a massive tax penalty on your hard-earned retirement dollars. Now, what if it is classified as a legitimate business? If you operate as a real business on Schedule C, you get to deduct your legitimate ordinary and necessary business expenses, the materials, the home office space, the mileage, the supplies. You only pay taxes on your net profit. However, business net profits of $400 or more are subject to the 15.3% self-employment tax for Social Security and Medicare. Hobby income, on the other hand, escapes self-employment tax. So how does the IRS decide whether you are playing around or running a business? They look at your intent to make a profit. They look at whether you run it in a business-like manner. Do you keep separate bank accounts? Do you keep accurate books and records? Do you depend on this income? And here is the famous rule of thumb. Did you make a profit in at least 3 out of the last 5 years? If you consistently lose money year after year and claim those losses to lower your overall retirement taxes, the IRS will audit you, reclassify your business as a hobby, disallow all your expense deductions, and demand back taxes plus interest and penalties. Furthermore, earning extra income in retirement can trigger the taxation of your Social Security benefits or push you into a higher Medicare IRMA bracket. So what are your actionable takeaways right now? First, decide your intent. If this is just a fun pastime and you don't care about making a profit, accept that it's a hobby, report the gross income, and do not try to write off expenses. Second, if you want it to be a business so you can deduct your expenses, treat it like a real business from day one. Separate your personal and business bank accounts immediately. Keep meticulous records of every receipt, every sale, and every mile driven. Draft a simple business plan showing how you intend to be profitable. Third, consult a CPA or tax professional before tax season rolls around. Do not guess with the IRS when you are in retirement. Protect your money, stand in your financial power, and don't let a fun side hustle turn into a tax nightmare.